Are you wondering what multi-time frame analysis is and how to use it when trading? Well, in this video I'm going to show you an example of how you use it and what it can do for you. So first of all, we're going to jump over to the charts and then we'll get into it. So the first thing we're going to look at is the daily time frame. Now this is where multi-time frame analysis, and I'm going to focus on it from an indicator point of view because it's going to make your life so much easier. So we can see that on the chart that we have currently a bullish move on ORD. So we know that from when it crossed over on the 3rd of January, we were only really looking for buys. Now, the way multi-time frame analysis works is that you recognize on a high time frame that you're in a bullish trend. Then all you have to do is you drop down in your time frames, and I've dropped down to the 15-minute, you could pick an hour, 5 minutes, whatever, is that you have to realize what you're looking at. So on the daily, we saw that we're in a bullish trend, and we can see that on the 4-hour, we're in a nice bullish trend at the moment. However, if you were to look at the 4-hour, you would realize that this is much more linear and less bullish than the daily has been. This being the daily, for reference, you can see that around the beginning of the month, it was near enough flatlining, so over this period of time. However, we can also understand that we were only looking for buys, because that's what the daily is saying, and the daily is always driving the lower time frames. So if we drop down, and I'm going to pick the 15-minute and I'll show you some examples, we're going to look for things that are only buys, and in this case it would just be following the method from the daily, which I've just got 2 hours on my chart, and I would only be looking for buys when they cross through. So you can see that we would take this buy, we wouldn't have taken this sell. We could take this buy, but we wouldn't take this sell. We could take a little buy in here, but it obviously wouldn't have worked. And you could take this buy up through here. I mean, you did have this choppy mess, but in theory you would have taken your buying entry down here. You could have potentially escaped with something before being wicked out, but that's questionable depending on your stop loss and the timing of the wicks. Again, you would have had a little one in here that would have lost, and you would have had a bunch of entries. However, your own filtering should remove some of these, and again, I'm just going to add something to the chart and we'll just see how we can filter it. So I'm just going to add crypto VN wave trend. Let's see what this says, and I'm going to set it up just so that it's a bit more visible for people. Again, I'm just kind of winging it just to make something that's going to be easily readable for you. I want that one. I'm going to keep the crosses on, we'll get rid of that. We're going to get rid of the long term, and we're going to make this nice and big just so that it's visible. I only need to, in theory, make the crosses because that's going to help you see it. So in this case, we're going to say when you get a green cross that you can look at the buy, and when you get the red cross you would exit or stop. So in this case, you could take a trade on this cross over here, and then you would have closed it nicely in profit over here. You wouldn't then take another green trade because you're waiting for it to cross back up and through again. So you can't take anything until this one here, which you would have probably had a loss. This you would not have taken until right at the very worst point, but you would have also had a close signal very quickly afterwards. And then this one you would be taking. And then this you wouldn't have had a trade because it never crossed through in time before the red. You would have had this nice trade through here, and again, you would probably not have taken this trade here because it's the green has come up well after the crossover. So just finding something that can help filter out some of the noise makes your life easier. And what I am intending to discuss is that with multi-time frame analysis, it's important to do a couple of things. One, identify what your higher time frame is telling you. If your higher time frame is telling you, hey, it's going to be buying, then you should be looking at buys, especially if there's a lot of momentum. Now, I can't vocalize what you're looking for in momentum, because sometimes you just get that waterfall effect, or sometimes you get that massive surge effect. I can't vocalize how you feel that, because truth be told, it's kind of experience led. However, what I can tell you is when you start to see things pushing off in a direction, you really want to be riding those trends, but don't just enter on the daily, because that's where you're going to get bitten. Wait for things to have pullbacks. Oftentimes, so we can see that the daily is buying. If we drop down to the 15 minute, again, no, we'll drop down to the 5 minute, why not? You can see that you're getting pullbacks. Every pullback is a chance to get in on that high time frame trend. This is where your scalping becomes swings. So you can take your tight trades, and as they're running into profit, it's like, well, you're on the daily time frame chart and you're like, yep, it's moving off in the daily direction. My low time frame is well into profit, set stop loss to break even, let it run. This is where letting scalps become swings comes from, and it's also where trading with the minimal amount of risk when scalping comes from, because you're letting those trades have the potential they need. So, and to kind of recap, 1, look at your daily time frame. What is it telling you? Is it saying buy? Is it saying sell? Is it consolidating? If it's consolidating, don't trade it. Wait for it to break in out of the channel it's in, and then you can do something with it. But if your daily is telling you buy, or like it's going up, then look for your short-term buys. If your daily is saying it's going down, then take your short-term sells. Do what the daily says. However, the best way to approach that is by looking for and waiting on those little pullbacks on the 5 minute, 15 minute, the hourly, and taking those pullbacks and using that to propel you forward. Because if you're taking those pullbacks on the 1 hour that give you the chance to enter onto the daily trend, then you're going to reduce your risk in terms of what you're open to drawdown wise, and also push your win rate that bit more because you're always on the daily trend. Now, this has been a short video, and I hope it's been helpful to some of you, and I will see you all in the next one. However, the best thing you can do is click on the next video for more information.